What's going on, everyone? How's it going? Market's looking terrible today. Anyways, we have a new rule filing sitting on the books, SR NYSEArca 2021-47. Notice of filing of proposed rule change for new rules. Now, I left it vague for a reason. Brief timeline on this one. It was first filed June 21st, 2021. Showed up on public inspection today, meaning if it shows up in the recently published section tomorrow morning, it will be approved or disapproved 45 days from tomorrow. Now, this is over 100 pages long, so I'm going to have to break this up into several different videos. I will create a playlist, take it from the top, and go and explain this as best as I can. Now, in this one, I'm going to give you a brief background, go over what these rules are, and then I will start breaking them down one at a time. So the rules, we have 6.1p-0, applicability. We have 6.37 AP-0, market maker quotations. We have 6.40p-0, pre-trade and activity-based risk controls. We have 6.41p-0, price reasonability checks, orders and quotes. 6.62p-0, orders and modifiers. 6.64 P-0 auction process, 6.76 AP-0 order execution and routing, and last but not least 6.76 P-0 order ranking and display. Holy tits, so much work. It's okay though. I do it because I love you and I need to know myself what this means. So in this one, I'm going to give you a little bit of a background. So this basically is a bunch of new rules, and they're also going to amend some current rules to allow for the implementation or the transition from its current platform, OX or OX, which refers to the exchange's current electronic order delivery, execution, and reporting system. Now it's going to be transitioning to the Pillar Technologies platform, and this is not just for the NYSEArca. All of the NYSE exchanges are going to file for this, and the exchanges being NYSEArca, Amex, Chicago, the NYSE Floor, and the NYSE National. And this is anticipated to be implemented sometime in the fourth quarter of this year, which would be October at the earliest. So that's basically it for the background of this. Now I'm going to go through and start breaking these down one at a time. In this video, I will go ahead and break down 6.1p-0, which is applicability. So it says, to promote clarity and transparency, the exchange further proposes to add a preamble to the following current rules specifying that they would not be applicable to trading on Pillar. So these new rules are basically like, I don't know, like a Articles of Confederation, or I'm sorry, like a Bill of Rights, I guess, for this platform. It's like a preamble. You cannot do these things listed in these new rules. So basically, 6.1p-0 or applicability would be based on the current rule, with differences that would streamline the proposed rule and reduce duplication of terms defined in Rule 1.1. It would be based on Part Rule 6.1-OE regarding applicability of other exchange rules, with changes to eliminate obsolete and duplicative text and to clarify the proposed rule to provide that, unless stated otherwise, exchange rules would be applicable to transactions on the exchange and option contracts. So the Pillar platform already was set up for equities. They're transitioning to have it working for options as well. So basically, the preamble again is designed to promote clarity and transparency in the exchange rules. That 6.1-0 would not be applicable to trading on Pillar. So that's it for this one. I will start breaking these down in order. So next, I'll probably do it 2 or 3 rules at a time. We're going to talk about definitions and references for market maker quotations and risk limitation mechanism. So this is going to be fun. I'll let y'all know when I get the next one out. Give me a while to type up the transcript on this one for the different languages, and I will talk to y'all later.